Shiba Inu's breakout is now running into the part of the chart where confirmation matters more than excitement. This matters because the article is focused on levels. The breakout above the triangle changed structure, but the next resistance band will decide whether this becomes a larger move or stalls into another reset. The tension is whether the supported catalyst is strong enough to survive the first reaction and keep drawing buyers once the easy excitement fades. The article highlighted the same key resistance zone around 0.000065 to 0.000072 and a possible path toward 0.000008 if that band breaks cleanly. It said rising volume, higher lows, and stronger derivatives activity were supporting the move. For searches like Shiba Inu Breakout, this matters because the article is focused on levels. The breakout above the triangle changed structure, but the next resistance band will decide whether this becomes a larger move or stalls into another reset. Those confirmed details matter because they tell you whether this move came from one headline or from several pressure points landing together. Immediate support was placed around the old breakout area near 0.000006. Once a token breaks out, the next job is to defend the old ceiling as a new floor. If that happens, traders start trusting the move more. If it fails, the breakout can collapse back into range quickly. A retest checks whether the old ceiling can become a new floor after a breakout. That mechanism is the part traders can miss when they only look at the chart. That affects short-term SHIB traders looking for confirmation rather than only momentum chasing, because the market is now between acceptance and rejection zones. This is why the move can look larger or weaker than one headline suggests. In stories like this, the structure underneath the price often matters as much as the candle itself. The open question is whether growing derivatives participation stays balanced or starts to create unstable leverage around the resistance area. Shiba Inu Breakout is the phrase tied to this setup, and the open question is whether growing derivatives participation stays balanced or starts to create unstable leverage around the resistance area. A market can move before those answers arrive, but it usually cannot keep the same pace forever without them. The important point is that price action and structure are not the same thing. A sharp move can be real while still resting on fragile conditions that have not been fully settled. That is especially true when leverage, concentration, or technical positioning is doing part of the work. Watch the breakout retest near support and whether SHIB can spend time above the resistance band instead of only poking through it intraday. Timing matters here because the next clean signal can separate a durable move from a temporary burst. If that signal confirms the story, confidence can rebuild quickly. If it fails, the move can unwind just as fast. The broader consequence is that traders are not only pricing a chart. They are pricing confidence in the mechanism underneath the chart, whether that mechanism is supply, leverage, collateral, or narrative follow-through. That is why this story matters beyond one intraday move and why follow-through is the real test. Watch the breakout retest near support and whether SHIB can spend time above the resistance band instead of only poking through it intraday. The practical takeaway is simple. Watch execution, watch the key level or flow that matters in this story, and do not treat an early move as proof that the final answer is already known. The market still has to validate it.